what's not looking good in the Asian markets is the Hong Kong index. So that one is down 1.5%.
People are looking to Asia as sort of a safe haven.
Today, BofA has downgraded the stock to neutral from buy, and they've cut the target price to 1320 versus 1500 earlier.
Sensex is up about 100. Mid-cap index is very, very quiet. The bank nifty isn't moving.
I think this earnings expectation of 18%, 19% for 24 is too aggressive.
This follows the spate of resignations that we saw between August and February this year.
The market is extremely choppy in a very tight and narrow range, so it's not an easy market to trade.
Banks will necessarily have to give a hearing to the borrower before any action is taken.
Cello is the company that we're talking about. What we've been given to understand is that the company is looking to come out with an IPO.
Sun Pharma has said that the ransomware attack resulted in a breach of certain file systems, theft of certain company as well as personal data.
The high that we touched today was 17,061. So right now we are just at that 17,003 mark.
Okay, it's a good-looking screen. It's a Monday afternoon. You're with us here on a fresh new edition of Closing Bell. I'm Prashant. Rima Surabhi with me in the studios here. Nigel joins us, as always, from the newsroom floor. 140 points as we begin another edition of Closing Bell. I mean, the only thing I can say is that let's hope the gains stick, because so far today it's been so volatile, up and down, over and over again. But in the beginning of the last hour of trade, it's looking a little better. 17,083 is where we find ourselves at. Let me just quickly run you through a few things before we kind of get into discussions, etc. Which means, I mean, given the rally that we have, we are at the day's highest point. That's number one. Where is the bulk of this gain coming from? It is coming from Reliance Industries, which single-handedly is contributing about 40 index points. Then you've got a combination of Infosys and TCS, and you've got a combination of HDFC Bank and Kotak Bank. These are basically the 4 or 5 areas where the bulk of this 0.75% move on the Nifty is emerging from. Overall market breadth, advanced decline is still deeply negative, and that is something which kind of stands out, right? Because you've got the Nifty, which is jumping, but the overall market is actually sulking. And the gap has not narrowed even as the Nifty has made a move higher. Asia was subdued earlier. Europe is doing better. But, I mean, mind you, Europe, of course, sold off aggressively on Friday, even as US was okay. So there is a bit of a pullback in Europe, which is there. I mean, the Euro Stoxx 50, the last I checked, was up about 0.75%. And on the way up, if you want to just track levels, the level to watch is 17,207. Which was the recent swing high from where the markets fell. So, I mean, that is not very far away. It's about 130 or 140 odd points away. But that's the first resistance for the Nifty on the way up. Rima.
Well, it suddenly feels like there is a spring in the steps of the markets in the last 1 hour or so, as the Nifty is now inching towards 17,100. Yeah. To take forward the rates in the European markets, currently the CAC, DAX and the FTSE are up close to about 0.7, 0.8% now. And even some of the beleaguered banks like Deutsche Bank had sold off aggressively on Friday. But today, Deutsche Bank has opened and rebounded with a gain of about 4 to 5 odd percent. So some nervousness surrounding the global banks appears to have ebbed for now, with the deal being struck between First Citizen and SVB. If you pull up the individual sectoral gainers, the top Nifty sectoral mover and the gainer today is the Pharma index. That's up 1.5%. Remember, it's rebounding from its 52-week lowest that it hit last week. IT is having a good session. That's up close to about 0.8%. Metals are doing well. Banks have started moving up in the last 1 hour or so. If you pull up that Nifty intraday bank, you would see that big up move coming through over there too.
Oh, yes, absolutely. So, I mean, on Pharma, I just want to make a point. In fact, Ekta and I were discussing this in a lot of detail on our digital offering, Who Moved the Market. And it's clear that there's no fresh news flow, but it's just that money has started moving. Look at the underperformance of the Pharma index. Just to keep things in context, last 1 year, the Pharma index is down almost 12%. The Nifty is flat. 1 year, I'm not saying year to date. Year to date, both are almost parallel. But this is a value destruction that we've seen on this side of the market in the last 1 year, whereas the Nifty is much better off. So some sort of a tactical shift is what seems to be happening, plus a couple of positive brokerage notes, some positive regulatory reactions coming in from the US FDA and the UK regulators. So all that's helping. We'll talk a lot about Pharma as we go forward. I just want to mention banks once again. Now, Nifty Bank is still underperforming the rest of the market in terms of, if you compare it to the Nifty. I think we'll watch out for Nifty Bank. Let's get the Nifty Bank up. Now, this index is just about 130 points away from the 200 DMA. Let's see if we can build on some momentum and if the bank index can take out that level to at least begin with. But Nigel, as Prashant said, I think there'll be no complaints from the bulls camp. Finally seeing decent momentum, at least for the time being, in the market.
Well, that's right, Surbhi, and Reliance Industries, that's the one that's been leading the way from the word go itself. So Reliance Industries holding one end up, and just till an hour or so ago, the Nifty Bank, it is unable to sustain at high levels. Now we're up close to 200, 250 points odd. The hope is we go ahead and we touch the 200 DMA. That comes in at around 39,750, very, very approximately. So we're a good 120 points away from those levels. But the Nifty Bank, every time we're seeing a bit of a pop, it's getting sold into. The broader markets, though, are in pain. We're just looking at the headline index and we'll say, well, we're having a green day. Take a look at the small cap index. It was down 1.6% in Friday's trading session. Today as well, it's down 1.1%. So portfolios will not be feeling very, very good because the small cap index is seeing intense selling pressure. The option data is indicating that we have an expiry that's going to play out. And the positioning is such that the 16,850 level will not break on the downside. However, at higher levels, going by the kind of writing we're seeing at the calls, that 17,150 will become a bit of a resistance zone. So let's see how this goes. But for the time being, we're holding in the green the Nifty Bank. That holds the key. If it can get to 200 DMA, well, we'll see a quick spurt on the upside. Otherwise, we could languish at these levels itself. Back to you.
All right. Thanks, Nigel, for that. 135.17080 is where we find ourselves at. Well, how should you position yourself for this last hour of trade? Mitesh joins in for a quick check on things. Mitesh, good to have you with us here. Thank you very much. In the morning, you were saying that in the middle of the range, so don't want to take a call on the Nifty one way or the other. I'm assuming that holds, right? So you're trading with stocks and more there on the stock side rather than indices?
Good afternoon, Prashant. I think that's correct. One, the Nifty is still in the middle of the range. But I was just listening to Nigel, and I think he made a very important point. The bank Nifty could be very interesting here, and that could possibly decide which way the Nifty goes. The bank Nifty has some intraday averages converge around these levels of 39,720, 750. So I think, and today's high is around 39,695. I think if the bank Nifty can start getting past 39,750, you might want to trade the bank Nifty and the Nifty also. Then, I think we'll have the potential to possibly head towards 7180 zones, and beyond that, even 17,300. So I think keeping a close watch on the index, but we haven't initiated a trade as yet, but trading with some long ideas on stock side. Reliance was also discussed at the beginning of the show. I think that's given a good reversal on the hourly chart. So buy here with the stop at 22.35, look for targets of 22.90. And Sun Pharma is something, which has had a choppy day. It was a morning. It had a weak kind of an hour, but then it's recovered very nicely, and now it's getting into a good positive zone. So that's a buy with the stop at 975 for targets of 1,010.
Mitesh, thank you very much for that. Let's talk about a few stocks which are in focus on the back of fresh brokerage reports. Sonal and Abhishek are standing by with details on Reliance Industries and Kotak Mahindra Bank. And in a bit, Nimesh will also join in to talk about the downgrade on M&M. But Sonal, you go first. Reliance Industries is clearly the stock of the day. What has Kotak said?
Well, it's the fourth positive note where the brokerage is saying that it has been a lot of correction that we've seen in the stock. So Kotak says that Reliance Industries' recent underperformance has been quite puzzling actually. Across key verticals, the outlook is very positive. In energy, according to them, the earnings would remain robust. In telecom, rising competitive intensity and likely delay in tariffs that you were talking about as well earlier until 2024 elections could impact the margins, of course. However, it would make the market a duopoly market and result in accelerated market share gains for Reliance Jio. In retail, recent acquisitions, store expansions and entry in new verticals is also a positive. So across all the segments, they are doing really well. Reliance Industries will have market leadership across several verticals according to Kotak. However, they have lowered their FY23-24 EBITDA by 4 to 5%. That is largely because of delayed tariff hikes. But overall, they are quite positive on the stock. They've gone ahead and increased the target price to 3,000 versus 2,900 rupees earlier and reiterated their buy rating.
Okay, all right.
Just one point, that she was talking about telecom and how Kotak is now expecting a delay in the tariff hike. Earlier, they were anticipating the tariff hike to take place in September this year. Now they're saying it's going to happen after the general elections, June of next year. they're saying that while this is negative for all telecom companies, right? You want a price hike, it brings in cash flows, etc., improves that. But in the case of Vodafone Idea, not having a tariff hike means no money is coming in. Plus,
it's a question of survival.
It's a question of survival. So in such a case, if there is a delay in tariff hike, it's going to help in Reliance and Bharti Airtel gain more subscribers at the expense of Bharti Airtel. So it boosts their market share acceleration and perhaps pushes the industry towards a duopoly. So in that way, a delay in tariff hike is positive for telecom.
Okay,
except Vodafone Idea.
Yeah, in that sense, when you put it up that way, because you basically then firmly move to a duopoly market, because for Vodafone Idea, no tariff hike probably becomes a question of survival. All right, thanks, Sonal, for the details there on Reliance. The other stock on our radar, because of brokerage upgrades, is actually Kotak Mahindra Bank, and Abhishek has been looking at some notes over here. Abhishek, which brokerage?
Well, CLSA has written on Kotak Mahindra Bank. They have upgraded the stock to buy from outperformance. Target price remains the same at 2,080 per share. So they say that the stock has underperformed, 50 to 130% over the last 3 years. Incrementally, the risk reward is becoming attractive. So valuation premium to peers has now narrowed. So for a market share of 2% and a formidable, banking franchise, this discounts looks, very less. So Kotak will be a growth leader in the coming years amongst the large banks, 3 to 5% higher growth than peers that they estimate between FY23 to 25. A bank will need to deliver on liability as well as asset growth together. So they are being cautious in terms of liability growth over here. That's the concern that they have written in the report. Valuation premium to HDFC Bank and ICICI Bank is just about 10% to 20%. Discounting the CEO transition, some premium to peers is actually justified. If you take a look, the net interest margin versus peers is on the higher side for Kotak Bank. M&A value can be a value accretion given the fact that their analysis suggests IDBI Bank's takeover at a 25% premium would be 30% book accretive and 15 to 18% earnings accretive. Back to you.
All right, thanks a lot for that, Abhishek. Gurmeet Chadda is standing by. Gurmeet, you heard what Abhishek had to say. Kotak Mahindra Bank has been a relative underperformer, actually. And the brokerage note believes their time is here. What's your view on Kotak Mahindra Bank and the banking space? What else do you like?
So Nigel, hi. It's basically, if you see Kotak and HDFC used to get valuation premiums for the growth they had. And since COVID period and mostly pre-COVID, the loan growth for Kotak has been more in the range of 15% versus 20% plus. And then you get similar growth rates in let's say, private banking peers like ICICI, Axis, etc., with now turnaround management and better quality. So I think it's more relative rather than Kotak actually not doing well to, the peers actually doing as well as Kotak and HDFC. And I think they have a very formidable franchise. I mean, almost like 60% CASA. The NIMs are almost in that 4.5% range. And now for last 2 quarters, if you see, there is a focus on getting the credit growth back at 20% plus. So some near-term catch-up can definitely happen. Their market share is also roughly about 2.5%. So there is scope to grow. And if you remember the previous case was when they acquired ING, and that gave the growth lever. So maybe an organic that could be the trigger. But as I said, valuations are still premium. So relatively, if I think ICICI, maybe Axis, some of the smaller banks like IDFC First, relatively are more attractive still in my opinion.
Okay, all right. So that's a call on Kotak Mahindra Bank. Gurmeet, good to have you on the show as always. I wanted to get your thought on this broad move that's built up in the pharma space. And I think everyone's wondering if this is the start of something new because the sector is so under-owned, it has underperformed, or whether this is maybe a flash in the pan, a one-day wonder kind of a thing. What do you say?
It's a bit of both. Some of it is tactical money chasing because it's really beaten down. And I was doing some maths now. The entire market cap of Pharma is way less than HDFC Bank. The weightage in Nifty is probably sub 4%. And if you compare it, average has been about 6-7, and globally healthcare is in double digit in terms of weightage. So one is relative valuation being attractive. Also, I think there were a lot of damage in terms of so if you take API and CDMO space, high fuel costs, solvent prices, repricing of contracts, I think will begin. So, and the base was very adverse because COVID led to ramp up. So look at, for example, DVs from 1,400 crores kind of CDMO sale, it went up to 2,500 crores per quarter, largely because of Molnupiravir, right? And then suddenly, Molnupiravir disappeared. So, so it takes time. It's a lumpy business, right, to get back, and CDMO is more attractive. So I think some of it is valuation, some of it is prices being more reasonable, and some of it, I think, with the base effect and things also slightly to improve. So I think risk reward is favorable, but this sector is not homogeneous. So I would still avoid the US generics. I think branded generics are better, more India focused. Similarly, some of the good CDMO names have corrected 40-50%. So valuation wise are better, but I still think there is maybe 1 or 2 quarters pain. And I think hospitals is one segment which continues to look good despite some ramp up. So you have to take a more integrated approach and not just brand the entire sector as well.
Any one stock in the pharma healthcare space that you would recommend?
So, we've not added anything, because we believe probably, as I said, there's 1 to quarter pain. But I think, as I said, there is some merit in some of the branded generics. You will have one good IPO also coming in March of Mankind Pharma, which again is 99% domestic. Let's see what the valuation band is. And we continue to like this, pharma outsourcing space. I think this is a more, since we are on the fundamental side. As I said, 50% price correction. So something like a Laurus and DBs. But if you should have the ability to take maybe 1 or 2 quarters of pain more.
Point is taken. Gurmeet, thank you very much. Do stay on. On the other side, we'll be joined by Anshul Sehgal of Kotak PMS, but need to slip into a very short break for now.
Welcome back. Reliance is really pushing the gains higher, 2% up on that stock. Grasim is in pole position, and SBI is keeping them good company. Some of the major movers on the index today. However, if we talk about the flip side, then one stock that has been under sustained pressure is Mahindra & Mahindra. Some of the brokerages are now flagging off concerns with respect to the growth on M&M's utility vehicle portfolio, among other things. Nimesh is joining in with the latest from Bank of America. Nimesh, what is BofA saying? They've also downgraded the stock, right?
Yes, sir. It's a rare downgrade coming in on M&M, and this time it's from BofA Securities. So they've downgraded the stock to neutral from buy, and they've cut the target price on M&M to 1320 versus 1500 earlier. They also have an underperform rating on Escorts, and there they've got the target price of 1700 versus 1800. Now, coming specifically to M&M, BofA has cut they've revised down the EPS by 3% to factor in mild tractor down cycle and cut UV volumes estimates. So that's the key concern on the downgrade. They believe that uncertain farm outlook, earnings downgrade, and lack of meaningful triggers are the near-term negative triggers for the stock for M&M, so to speak. And they believe that the street is overestimating the earnings scale up in the UV business. Now, overall, for the tractor business, BofA believes that there could be a 3 to 4% decline YOY in terms of tractor volumes for in FY24. And if there is to be an El Nino effect, and then that could be the decline could be 8 to 10%. Though that is not the base case for BofA, but they believe that there are headwinds for the sector, for the overall sector, and the fact that M&M has been an outperforming stock at these levels. They've downgraded the stock to neutral now, and they've got the target price as well. But I was looking at the Bloomberg consensus on M&M. There are 41 buys and there are only 2 sell recommendations on the stock, and now BofA is the third one to downgrade a notch to neutral. In terms of target prices, the most bullish ones are in the range between 1700 to 1750, and the 2 brokerages who are negative have a target price close to what the M&M current stock price is, around 1150, 1170. So interesting that this is a third brokerage which has come out with a negative report on M&M and a notch downgrade from BofA Securities to neutral now from buy earlier.
Nimesh, thank you very much for that. This follows Kotak Institutional Equities, which had written on M&M last week, where they had cut UV segment's growth rates from 58% in FY23, which they're expecting, to about 7 to 8% next year, because all the pent-up demand will now wane. And secondly, on tractors, they're saying that from a 23% growth that the tractor business is likely to see this year, growth will slow down to just 5%, and again highlighting the risks coming in from El Nino. But despite sharply lower growth rates next year, Kotak still believed the M&M stock is attractively positioned, which is why they have a buy call, which ties in with what Nimesh said, that most of the street is still very bullish on M&M, despite the near term appearing to be fairly challenging. Gurmeet, thoughts on M&M, and which side of the camp are you on?
I think I'm constructive. I think there are near-term headwinds, largely because of tractor, and forecast on monsoons. But if you see their SUV business, the order book is still upwards of 2.7 lakh units. The waiting time has come down to 1 month, but it remains robust. Supply chain is improving, but still not working to full capacity. They can do like 40 a month. Wholesales are still like 31,000. Also, I think they're investing heavily in the farm equipment business. They wanted to, want to grow 10x, which probably the street is concerned can add to lower the margins, which has been a bit of a concern. But I think the launches also, there are no near-term triggers after they had back-to-back 5 launches, right? So the Thar 5-door is only towards the end of the year. Even the EV models are more towards the end of the year and early next year. So maybe it could be because of lack of near-term triggers and some stress on tractors. But, these things can change. You can't get bearish on stocks on a monsoon forecast. I think the company has shown good turnaround. The capital allocation is much better. And valuation is still reasonable at 11, 12. So, we remain structurally positive on this space.
Okay, I had a question, food-related question, Gurmeet. But a business question also. Do you know that Zomato has introduced the service, intercity food service? I mean, they get you food from one city to the other. Some of the iconic places.
Yes.
I saw that they had the Sitaram Divanchand Chola Bhatura on their. Does it make sense scientifically, the bhaturas to get them from Delhi to Bombay?
Even local delivery doesn't make sense, Prashant. They need to you need to have them fresh. So forget about intercity. That particular dish has to be fresh. But yeah, it's a. See, I think even in food, I think the startups which can actually now shrink and focus on more profitable segments, I think are the ones which are going to do well. You made that point that 5% people are responsible for 75% of the orders, right? So it's Pareto's principle everywhere. So I think you need to relook now, which are the profitable segments and then probably, pivot rather than, high growth and high. I like QSR space more, by the way, more on a structure.
And that
Gurmeet and Prashant, you folks are making me homesick. I think I have to get on a flight straight from here and head to Delhi.
As my wife says, looking at your size, you should stop talking about food.
There's nothing that good food can't fix, really. But, since we have to... sorry, you were saying, Prashant?
No, please, go on.
I'm saying since we have to force ourselves to move away from food. But I'll say to a related space, some of these new age companies, Gurmeet. Nykaa. With tickers reminding us about the pressure on the stock. We know about these 5 exits, right? The news came in on Friday. It's been a huge value destroyer. And this is one company that was actually profitable when it listed. Would you look at any kind of bargain hunting, bottom fishing at all?
Not yet, Shubhi. And I think the mode of why can't a Reliance enter or a Jio enter in the same segment, right? I think, as I said, the company need to probably not demonstrate profitability more in this environment. See, it's a high cost of capital environment, and the capital will also be, scarce. And we've seen the rundown we have had a lot of banks because of stress in startups and the private market space, right? So I'll be a little careful. But as I said, I like more something like QSR because, so look at something like a Devyani, unrelated to Nykaa though. Almost 1,200 stores, average daily sales for, now I think KFC is upwards of 1.1 lakhs. Pizza Hut and Costa Coffee are now like 40,000 kind of ADS. And this business working capital is negative. So once you achieve a scale, it really adds to the EBITDA far more geometrically, once you achieve that inflection point. And I think with, reducing cooking time, more women force working, these are more structural trends. So I think this is something which will probably do better And I was making that point. The entire market cap of all QSRs put together is like 60,000 crores, which is less than, let's say, Cipla. So I think the opportunity size itself is pretty big in my view.
All right, fair enough. Gurmeet, thanks very much. We end on food, which is always a good way to end the conversation. Thanks very much for your time. Well, Anshul Sehgal is with us now. He's head and executive vice president at Kotak PMS. If I'm not mistaken, another Delhi boy. Anshul, good to have you with us here. Thank you very much for your time. Good afternoon. How are things at your end, Anshul, looking at the way markets have come off? Quite a bit, right? I mean, over the last many days, last many weeks actually, and much more than some of the other markets in the Western world, where many of these global problems come from. Are we looking sort of sold enough so that there may be a little bit of a tactical turn? Many have been expecting that. Go on.
Hi, Prashant. So till 5 minutes back, my situation was very good. We are sitting on some cash. Now I'm wondering whether I should be investing it in stocks or chola bhatura and gulab jamun.
Food will always get you good returns, Anshul. Food, as long as it's quality food, you don't have to wait for timing or anything of that sort. It's instant returns, right?
Someone on Twitter mentioned, आप भटूरे मंगवा, आप छोले मंगवा लीजिए, भटूरे घर पे बना लीजिए. That's a solution to hot. Anyway, Anshul, go on. Sorry.
Yeah. So you're absolutely right, Prashant, on that. The market is quite bearishly positioned. FII is holding record shorts. Domestic institutional investors holding record cash. This is a setup for not material downsides. On the other hand, you have seen in recent times credit events play out globally. But even on those credit events, we have seen that the US Fed, which whether we like it or no, drives global markets. The US Fed has come out and said that they want to backstop any volatility or any adverse action in these financial institutions. Now, with that sort of a setup, it looks like if not us being at the bottom, we are somewhere close to it. This is not a time to be overly bearish. This is a time to actually build portfolios for returns to play out in calendar year 24. Of course, in the near term, you will see some impact on earnings. Nifty consensus EPS is 1103 for FY25. We see downgrades to that. But because markets have corrected over the last 2 years, or thereabouts, say 1.5 to 2 years, we anticipate that much of this sort of downgrade is already in the price. So this is a time to actually build portfolios.
All right. Hi, Anshul. Good afternoon. All of you are talking about food. I was wondering when any of you all will chip in with some drink, but be that as it may, it was a good conversation. Anshul, since you're sitting, yeah, should we?
But you know what, Nigel, just to add, I think we all didn't get to enjoy our Friday, right? Friday felt more like a Monday. So we're treating this Monday as a Friday. So hope, Anshul, just bear with us. That's all I'll say.
All right. Anshul, getting back to the markets then, it's a good time to build portfolios. So what will the allocation strategy be? Will you be looking at value stocks right now? Stocks are trading at, decent PEs with good ratios. Or will you be looking at growth-oriented stocks? The toss-up between the two.
Yeah, Nigel, rather than segregating stocks into value and growth, we will look for earnings visibility. We believe that earnings visibility is what prevents downsides in case of any volatility. At least such companies don't underperform the markets in case there is volatility in the markets. And also, because there is earnings visibility, if they do go down, then investors have the comfort to go in and buy. So for us, earnings visibility is paramount. Combined with that, if we can get reasonable valuations, I think that is Sone Pe Suhaga. That's really what we are seeking. Reasonable valuations with earnings visibility in quality companies. And believe me when I say that I'm spoiled for choice, there is enough and more opportunity in the market where these parameters actually fit in. So that's the way we are looking at it. I don't think that, in fact, time has sort of taught us that if you're just looking for cheap valuations and there is no earnings visibility, then there can be downsides despite valuations being reasonable. That's not the metric that we are seeking.
So, Anshul, you said that there are plenty of opportunities and you are sitting on substantial cash. Can you tell us where you're planning to deploy this money? Which are the sectors? Which are the stocks?
Yes, Rima, we think that banking and finance, there is enough and more opportunity. If you look at this space in terms of valuations, valuations are in fact on price to book basis cheaper than pre-COVID levels. Now, while stocks have rallied, but so have earnings gone up and book values have gotten accreted. As a result, on price to book basis, we are at very reasonable valuations, even if we compare to pre-COVID levels. And there is visibility of growth. Of course, in the near term, because of global issues, the macro environment for this space looks kind of uncertain. But here, as I said, we have earnings visibility for the long term, nearly 1 to 2 years at least, we have earnings visibility, and that should give support to this space. We are going to deploy capital here. We believe that capital goods as also consumer durables, those are pockets which have seen material correction. Some names within those pockets have seen material corrections, and that offers opportunity. Pharma it's not done anything for nearly 6 to 7 years. In valuation terms, again, that space looks to be at the bottom. If you look at what's happening in US, you're seeing drug shortages over there. One thing has to give. Either valuations have to move up or prices have to move up. And even that will act as a trigger for stock prices. When I say prices, I mean drug prices. Even that will act as a trigger for stock prices. So pharma looks like an attractive bet at this time. These are just some pockets that we are seeking at the moment.
Anshul, I'm just wondering if you are willing to take any contra bets in some of the beaten down parts of the market, whether that is IT or asset managers, life insurers, for obvious reasons. I mean, these stocks have really underperformed. Any interest in any of these?
IT, in the last 10 days, the outlook may have changed adversely, but I must say that in IT, again, valuations are not at frothy levels as they used to be till beginning of last year. There has been a material correction. So on a stock-by-stock basis, there is opportunity in IT. We will look at IT going forward constructively. Other than this, I'm sorry, Surabhi, if you could repeat which other segment you referred to.
Anshul, I was talking about the other segments of BFSI. You mentioned banks, but the other segments, life insurance, asset managers. I mean, the whole thesis was a very sort of noble one, financialization of savings, etc. But last couple of months, stock prices haven't exactly, been burning up the charts.
Right. In insurance companies, we would be slightly wary at this time. Just the macro headwind is too adverse. We'd stay on the sidelines, and also valuations are nowhere near attractive levels. Again, asset managers, too many clouds on the anvil. We will be cautious here, although I must say that much of the uncertainty is being spoken of quite vigorously in the markets, and if that is typically when that happens, such uncertainty is in the price. We've seen these asset managers correct quite meaningfully, and so this space may be of interest in some time to come. On NBFCs, there are NBFCs which are quite attractively priced at this time. Look at where gold prices are at this time, and just because gold prices are up, some leverage availability has been created in gold finance companies, for instance. So also in certain housing finance companies, we see opportunity at this time. So within pockets of BFSI, varied pockets, we do see opportunity. Insurance, we would be a little wary at this time.
It's a pleasure. Thank you very much for joining us. and good speaking with you this Monday afternoon. Thanks indeed. Well, look at the market. The Nifty is just a one-way slide. The high was made at right at about 240 or so, but the fall started at about 256. Just 4 minutes to 3, and then it's been a one-way kind of fall. 60, 70 points gone, actually, almost 80 points gone. Very, very quickly, as you can see. Maybe we can pull these, Reliance intraday up. I think there is a sharp slide there. These are stocks where, you could shave off gains, and you can see that off the highs. HDFC Bank is the other one, which maybe you can put up. I don't think HDFC Bank has moved much. The intraday will tell us. And Kotak Bank has come off quite a bit, quite sharply. And the other one is Infi. Infi has come off. It was at about 1400. It's lost about 14-15 rupees in the last 6 or 7 minutes of trade. So these are the stocks which were leading, and these are the ones which have pulled the market back down a little bit as well. 16,988 on the Nifty. We'll take a break. We are going to come back, get you what's the chatter in dealing rooms with our segment D Street Chatter. Nimesh gets you that. Buy today, sell tomorrow ideas. Short-term trading calls with our technical experts coming up. Stay tuned.
Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, it's that part of the day where Nimesh joins us to tell us what he's picking up in terms of D Street Chatter. Well, Nimesh, we're focused on the headline index, the Nifty, but the real pain is in the broader markets. Just take a look at the way those stocks are falling out. Oh, well, what's the feedback you have?
So from the broader market point of view, Nigel, the feedback is very clear. The sentiment is extremely poor now. There is lack of participation. People have lost that interest as well. And when I talk to some big traders or even HNI investors, generally the sense is that they now believe that this is going to be a time correction and could be a longer one. So they're mentally prepared for it. And I guess traders are also getting a little frustrated with the fact that every day they have to come in. There's hardly any moves in the broader market. So that's been a pain point for sure in the last couple of days. Having said that, we just gave up most of the gains in the last 10 minutes of trade. Largely we've been trading in the green, largely on back of the global cues. For the first time in many days, the weekend was slightly calmer in terms of the global cues as well. So that was a bit positive for us. In terms of flows, I believe there's going to be a market at close basket at a leading FI desk, but it's a mixed basket. So there's buying and selling as well. So some of the stocks may see a big move in the last 30 minutes of trade, largely on back of that flow. So that's the overall feedback. In terms of sectors, Pharma stands out today, but no specific reason. But I guess there is some bit of renewed buying interest back. But it's again, from a larger sector point of view, it's the banks which are still under pressure. So there is selective selling pressure in some large cap banks even in today's state. So that's the overall feedback. Technically we've been saying this for a while now that 16,800 is a very important support level on the Nifty. But as you rightly pointed out, the bigger pain is in the broader markets, the mid cap index, the small cap index, and the breadth is very weak and sentiment is also very weak. So that's been a pain point. But I guess today there is a bit of a relief rally, largely on back of a calmer global market, so to speak, to start with for Indian markets.
All right. Nimesh, what about individual stocks? You mentioned a couple of sectors as well as market setup. But what about individual stocks? What are you picking up?
Again, so going with the theme of big blocks happening. So the first stock today on my list is CE Infosystem, which is MapMyIndia. While the stock has been consolidating, it's been down 10% this month and been under pressure as well. But now there is a sense that there could be a large block deal in this particular company very soon. So that's something to track in CE Infosystems. The second stock is HDFC Life. After what we saw last week and big correction on the insurance names, some bit of buying traction is back, and HDFC Life stands out largely on back of buying it. So the delivery volumes are expected to be quite high in today's trade in HDFC Life. So that's the second one. The third stock is Tata Power. Again, within the power space, this is one stock which is relatively underperformed and been under pressure as well. Even in today's trade, the stock is down 3%. But I believe for the last couple of days, this bit of selling or correction is been used to buy, and there is one large FI who is actively looking to add Tata Power at this level. So that's Tata Power. And the last stock is Biocon. In 1 week, today was the second upgrade coming in from a sell-side analyst. So after Bernstein last week, IIFL today has upgraded the stock to a buy, and they believe that worst seems to be priced in. But from a flow point of view, even in today's up move, there is supply from a larger FI into Biocon. So we saw what happened last week when a big hedge fund sold at a 10% discount, and that supply seems to continue in Biocon despite today's up move on the back of IIFL note.
Thank you very much for that, Nimesh. Look at the small cap index. It's down 1.5%. And the advanced decline ratio now has one stock in the green for 4 in the red. So nearly 2,400 stocks currently trading with cuts. Mitesh is back with us for a few BTST calls now. Mitesh, what have you made of the sell-off in the last 30 minutes? What would you attribute it to? And what does it take your positioning then?
So basically, Nima is back to the range. I think the market is not showing any strength of getting beyond the range. I think I talked about the fact that if the bank nifty starts getting past 39,700, we will see some strength coming. But that's not happened. And the bank nifty tapered up. Along with that, the nifty is tapered up. So back to the grind. It's just a choppy sideways market. On the stock side, I have one buy and one sell call. Bandhan Bank is something which is on the STBT side. Keep a stop at about 200.5 and look for targets of 193, 192. And Ultratech Cement is a BTST kind of call. That's a BTST with a stop just below levels of 74.20 for targets of 7,500.
Okay, by the way, look at the nerves on the street. We started the show and we were talking about a move of about 140, 150 points. And now the market is threatening to give up almost all of it. That slide that Prashant alluded to, it's only continuing even now. Look at that, we've lost 100 points. It's a one-way slide down. It's not like it's being triggered from global markets. Nothing really is moving on the European screens. Most markets are up and about. But this is a very, very swift decline that's come through. The Nifty is barely up 35, 36 odd points as we speak. Well, the one sector, the bank nifty, by the way, has turned negative, even as we're just completing that sentence. That's the extent of volatility in today's trading action. The one sector that, however, has stood by in positive territory for the entire day is really pharma. And there's a lot of news as well in individual pharma names. So let's get to Ekta to wrap up all the action. Ekta?
Thanks for that. Well, I'll start with the nifty stock, Sun Pharma, which is in focus. Ransomware Group has claimed responsibility for a recent IT incident which had taken place. This is in a further intimation that Sun Pharma made to the exchanges. The first one was on the 2nd of March. They have indicated that because of the incident, there is expected to be reduced revenue in some businesses. FY23 guidance of high single-digit to low double-digit growth is likely to be intact according to analysts, and that's probably one of the reasons why there hasn't been any kind of adverse reaction to this. Also, separately, Sun is going to be acquiring around 60% shareholding in an animal health company for around 143 crores. So that is probably one of the other pieces of news. And Credit Suisse has upgraded Sun to outperform from neutral with a target price of 11.50. They are bullish on the specialty sales expected to double in the next 4 years. Lupin is in focus because the UK regulator has completed an inspection of their Pithampur facility successfully. Also, the US FDA has completed an inspection of pharmacovigilance inspection with no observations for Lupin. And remember that type of inspection is basically including a scrutiny of practices and procedures for reporting adverse events of Lupin's products. Biocon in focus on account of an IIFL note upgraded from reduced to add for the stock with a target price of 230. According to them, valuations are reasonable but not cheap enough at this point.
Okay, thank you very much for that. Let's get Mayuresh Joshi, the head of equity research at William O'Neill, on the show now. Mayuresh, for the last couple of days, Pharma was giving some signs of bottoming out. Just in the last maybe 10 days or so, there have been 2 or 3 instances when Pharma turned out to be the best performing index, and it's done so today as well. Any of the stocks that you like now, which you believe has perhaps bottomed out?
Afternoon, Rima. Obviously, because of the global macro concerns and the kind of volatility that you're seeing globally across markets, the time correction that Nimesh was talking about can be very, very profound over the next few months. Having said that, Pharma has probably been one bright spot. And in times of stress and volatility, this sector probably stands out. One stock or a couple of stocks which are probably standing out, one stock which is probably in the zone at this point of time, Zydus Life. There have been some observations in terms of the US FDA that have been pointed out, but a large part in terms of the innovative drugs that they're expected to, specifically in the Indian domestic formulation business, should relatively hold out earnings for this stock going forward. Secondly, I think the kind of product pipeline that they've got, complex injectables and expectations in terms of niche orphan drugs, and the expectations in terms of these complex launches from FY24, that should start propping up the earnings estimates. management does expect margins to hover around 20-21%. NCE should probably be 1/3 of the revenues, which should probably ensure that EBITDA margins stay about 20%. A very minimal debt onto their books. The wellness part should also hold up. So I think Zydus Life is something that is probably holding on to the pivot as per the only lens. One other stock probably that can be kept on the radar is obviously Dr. Reddy's. Again, specialty pipeline in terms of biosimilars and injectables, expecting 40% of that in terms of the pipeline going forward. 25 complex launches expected to come through. Margins expected to remain range bound between 27-28%. The PSAI part of the business expected to stay strong as well. And again, minimal kind of a debt equity onto the books as well. So again, I think a couple of stocks from the pharma space, which are very, very close to the pivot level.
Got that, Mayuresh. I just want to get back to the market. Look at this, 14 points. That's all that we have left on the screen now in terms of the up move. There's a bit of a movement on the VIX as well. India VIX is up about 1.5%. But Prashant, this is not something to take lightly, right? This is sort of a one-way slide. It's gone in 60 seconds or maybe, not 60 seconds, maybe 3 or 4 minutes, right? Without any specific triggers. I don't know if it's expiry related because we have a truncated week. Expiry happens on Wednesday. But I think this would be disconcerting for a lot of people.
Disappointing for those who were hoping for a rebound, right? But, I mean, if you're looking for reasons, at least there's nothing on the horizon. I think you looked at global markets as well. So they're all up 0.5%, 0.75%. I looked at Europe as well, 0.75%. Banks there are rebounding. So this is just a pullback we're seeing from the high point of the day. And very, very sharp pullback that we're seeing from the high point of the day. Maybe data bears things out later in terms of institutional numbers. And we'll have that when those numbers start to come in.
One thing, when I was talking to a few people in the market, and they were indicating that come 1st of April, there are going to be a lot of tax changes, right? From both from the insurance point of view and then for debt mutual fund. And corporates and ultra high or HNIs generally were parking their money either in these debt mutual funds or in the insurance products where you've got those guaranteed returns. So they may actually look to pull money out of the equity markets in, today, tomorrow, and lock it in before 31st of March to, make that, make sure that they don't get taxed beyond that. So, that is just one explanation. Some people in the market were saying that there is a possibility that we could see flows coming out from the ultra HNIs from the equity markets in the next few days so that they can park it in before 1st of April and the tax changes which come in insurance products and even in the debt mutual fund.
That's possible. That's absolutely. That's one reason. So you just have a few days this week basically, to do it if that were to be a factor. So actually, we'll try and have someone who looks at the HNI community pretty closely and try and understand if that indeed is happening. But if that had to happen, it would happen this week. 11 points on the Nifty, 16,956 is where we're at. Abhishek is standing by now. And this is an interesting story. Basically, prepaid instruments, right, which, like your wallets, etc., which are, when you use them and you use them via the UPI rails, now will attract a small charge, actually not a very small charge, which will be charged to the merchant. This is interesting. This is important as well. Abhishek is going to explain to us this in detail. Abhishek.
Well, Prashant, as you mentioned, PPI charges for merchant transactions in UPI is in place. So recent circular from NPCI suggests that, there are following charges which are applicable to merchant transactions initiated. So using PPI on UPI from 1st of April 2023. So interchange at the rate of 1.1% on the transaction above rupees 2,000. Then for industry program merchant category codes, interchange is as follows or on your screen for telecom, mutual fund, utilities, education, government, supermarket, fuel, insurance, railways, as well as agriculture. So PPI issuer will pay about 15 basis point to wallet loading service charge to remitter bank, and interchange is not applicable in terms of P2P and P2PM transactions between bank account and PPI wallet. So we have a brokerage view. Equirus says that as per existing guidelines on debit card, the MDR charges range from 0.3 to 0.8 5%. So this could be the first step, and we may incrementally see interchange being announced on other modes of payments as well. So around 65 to 70% of UPI P2M transactions by value are of ticket size of more than rupees 2,000. So with introduction of interchange of about 0.5 to 1.1%, they believe that there is adequate possibility for various stakeholders in the system. So this could, or this should also be seen positively for credit card companies as the risk of any cap on MDR actually reduces. Back to you.
Okay, but before credit cards, I think it is positive for companies like Paytm, right? I mean, wallet companies, Abhishek, thanks very much for that, which, I mean, you know, merchants and the players in the ecosystem have been saying that, well, it's, you know, how do you compete against free? Of course, for P2P transactions, customer-to-customer transactions, there are no charges at all. This is only P2M, which is, you know, customer individual to merchant transactions above 2,000 rupees using the UPI rails will attract a fee, which goes from the merchant to the issuer, which will be Paytm, for example, in one case, or any of the other issuers of these wallets. So that's the story. 620, we'll try and get reactions by talking to companies later on. There's just 5 minutes to go for market close. We'll take a very quick break here. We are back. More comes up on the other side. Okay, welcome back. Just 3 minutes to go for close, and the first day of this new week is pretty much like, you know, the last many sessions now, absolutely flat. All of the enthusiasm which was there till about 2:30, 2 o'clock, mid-afternoon, completely out. And we're ending absolutely flat. On the Nifty, we'll end with about a 20-odd point gain, which is a massive sell-off, 110, 120 point sell-off from the day's high. The Nifty Bank ends about 0.25% lower, and that will end at about 39,310. The stocks which did well also pulled back. I mean, Reliance was the big gainer, contributed heavily. The IT names, both Infosys and TCS contributed. And then the HDFC Kotak combo also pulled back a little bit from the day's high, but those still remain, by and large, areas where you could spot gains even by close. So a disappointing day for those hoping for a bit of a rebound. And I guess it's back to a little bit of global watching once again. Rima.
Well, I think the bigger disappointment has come in the broader markets in the way it collapsed. The mid-cap index ends with a cut of 0.6%, but the small-cap index was down 1.8%. And the advanced decline ratio was 2 stocks in the green for 9 on the losing side. So that's where the bigger knock came in. In terms of sectors, autos were on the back foot. So M&M, after the BofA downgrade to a neutral rating, M&M ends with a cut of 1.25%. Adani Ports under pressure. Tata Motors, a couple of private sector banks like Axis Bank, ICICI Bank sold off aggressively towards the end to close in the red. On the gaining side, Pharma, that was the sector with leadership. The Nifty Pharma index ends with a gain of about 0.7%, but off from the early morning highs. At one point of time, the Pharma index was up close to about 1.5%. Cipla, Sun Pharma, Divi's Laboratory amongst the gainers. SBI, Maruti also amongst the large caps which moved on the way up.
Well, Walkout was one pharma stock that didn't participate in the rally today, and it really stands out like a sore thumb because of that 6% downward move and on big volumes, by the way. So that one did not participate. IEX saw lots of pressure, 6% down on that one. Some of the fertilizer names like NFL were down about 6 to 7%. So quite a bit of pressure. Not a good day for the broader markets at all. Let me just pull up the asset managers. Most of them were struggling throughout the session. So Nippon Life, 2.5% down, UTI, AMC. HDFC managed to turn the corner. Slight green on HDFC, AMC, but the others were down and out. SBI Card losing some ground because of a fall in at least month on month, if you see the average card spend. So that was under pressure. Butterfly, Gandhi Mati, the merger ratio is out. Some adjustment was happening. Butterfly was down about 4%. Crompton, last I checked, was flat with a mild positive bias, 0.5% up on Crompton. Spark, by the way, was also down to 2.5%. A lot of these concerns around the ransomware attack that Sun Pharma was facing. On the upside, you have some positive names. Of course, some of the pharma stocks that were in the news, like Lupin, on favorable regulatory news points, 3% up over there. Phoenix Mills on positive brokerage commentary managed to move higher. And Paytm, of course, the story that we were just discussing, perhaps the option of looking at a little better profitability with respect to merchants getting charged on the transactions, wallet transactions that happen through the UPI rails. So that worked well for Paytm. But all in all, just an 18-point gain and a close below the 17,000 mark definitely makes it a very disappointing session for the bulls.
Okay, with that, we're going to wrap up. Okay, we won't wrap up on closing bell. We'll slip into a very short break. On the other side, we'll tell you how generative AI, like ChatGPT, could impact the labor market, productivity, and global growth. Stay tuned.
Welcome back. If you're just sort of tuning in, the market has ended in a disappointing fashion, off the day's high by quite a bit, but still with some 20-25 odd points and gains on the Nifty. Now, generative artificial intelligence like ChatGPT and Lambda are making their presence felt in a number of industries. A Goldman Sachs report says that up to 2/3 of current jobs are exposed to some degree of AI automation in the US and the European Union. Rima has walked across to the big wall with the details. Rima.
Here we're trying to present the impact of generative AI, like ChatGPT, on three key macros. The first one is the labor market, the second one is productivity, and the third one is global GDP, and this is as per a Goldman Sachs report. So let me start with some stats on the labor market. Now, they're saying roughly 2/3 of the current jobs are exposed to some degree of AI automation in EU and in US. There are some professions where a large part of the work can be automated. For instance, 46% of the legal administrative work, or 44% of the legal work can be automated. But then there are some professions which are physically intensive, like construction or maintenance, or occupations for which a significant share of the workers' time, employees' time, is spent outdoors performing physical labor, and these cannot be automated by AI. Now, according to Goldman Sachs, generative AI could substitute about 25% of the current work in US and EU and expose the equivalent of 300 million full-time jobs to automation. Now, that sounds a bit worrying. But here is the good news. Historically, worker displacement due to technology or automation has often been offset by the creation of new jobs and the emergence of new occupations. So generative AI, according to them, is likely to complement and not completely substitute the workforce. Now let's move on to the impact on the economy. The headline here is that Goldman Sachs estimates AI could eventually increase annual global GDP by 7% over the next 10 years. And this will be aided by an increase in productivity. So what will drive the productivity boom? 1, significant labor cost savings. 2, there will be new jobs which will be created. And 3, higher productivity for the workers who've not been displaced, who've not lost their jobs. So generative AI, according to them, can raise annual US labor productivity growth by about 1.5% over a 10-year period. But the caveat here is the overall impact on the economy will depend on the capability and the adoption timeline. When does this become mainstream? And currently, both those parameters are a bit uncertain. Back to you.
All right, that's AI for you. It's a topic on which I'm sure over the next many months we will hear a lot more. Well, let's get you some news from the primary markets as well. The iconic brand Cello may be looking for an IPO soon. They're looking to raise about 2,000 crore rupees. Yash has got the details. Yash.
Well, it's been really long since we spoke about the primary market action or the IPO market action, and we're sort of restarting that today. And what a company to really restart that with. Cello World is the company that we're speaking about. What sources have told CNBC-TV18 is that Cello World is looking to launch its IPO. The intention would be to raise approximately about 2,000 crore rupees. Sources tell CNBC-TV18 that the IPO could be a combination of fresh issue through which some funds will come into the company, which is expected to be used towards strengthening the distribution network. Also, there's an offer for sale element into it, which means existing shareholders would also look to sell partial stake belonging to them. As far as the process itself is concerned, we've been given to understand that Cello World has already started engaging with the bankers. In fact, IIFL, ICICI Securities as well as JM Financial have been appointed to lead the IPO process. As far as the timeline is concerned, sources tell us that the company would look to file its DRHP with market regulated SEBI sometime by August of this year and eventually launch its IPO by the end of current calendar year. As far as the kind of businesses are concerned, it's a long list where the company is present today, starting from home essentials like drinkware, lunch boxes, cookware, dinnerware, to sort of coming to bathroom accessories, air purifiers, vegetable and fruit washer, UV sanitizers. Also, the company is present in the basic entry-level furnitures also. There are listed companies which are sort of involved in businesses which are bits and pieces of what Cello does, but having all these different kinds of businesses under one company will be an interesting IPO to watch out for.
All right, it's a brand we all know, products of the brand we've all used. Yash, thanks very much for that. Slip into a quick break. Manisha will join in with all the action from the commodity space in just a bit. Well, a disappointing day for bulls, those who are hoping that the market will finally break out. It did give us the signs mid-afternoon, even late into the session. The Nifty was up 130, 140 points. But in the last 45 minutes or so, I mean, things just completely went south. The Nifty ended absolutely flat, 20-odd point gain. Banks actually sold off. The Bank Nifty was in the red by close. And it was not as if there was any great global volatility in the last 45 minutes of trade, our trade. So this is just sort of falling on its own weight. Nifty, the gainers first. Reliance was a big contributor. Infosys, Kotak Bank, Grasim and State Bank of India. More banks, I mean, actually large cap financials doing quite okay. Cuts coming through on names like Adani Ports, SBI Life and Power Grid, which were the top losers. Market breadth never recovered. Even when the Nifty was up and up, market breadth was deeply in the red, and that was the way we closed off at 330. IEX, Wockhardt, Aarti Drugs, Hikal, Surya Roshni, Bombay Dyeing are some of the names which fell on volumes. But there were gainers as well, even though, as I said, breadth was firmly negative. HAL, the defense name, Lupin, Biocon, Glenmark. Pharma actually had a pretty decent day. Naukri, that is InfoEdge, and Uno Minda were some of the stocks which did quite well. The question is, now that the market today once again has given up from the day's high and sold off, will it eventually retest the 16,850, 16,800 kind of levels? We got two tests of those levels, but successfully that was defended. And of course, global headlines become important again. US seemed settled as we came back into this new week. European worries continue, although price action in Europe today was also quite okay. Will banking worries globally take a bit of a backseat, which should allow us some relief rallies? Back to you.
Welcome back to Closing Bell, and let's chat commodities now. And we have seen many of the commodities actually posting strong gains for the week and for the month of March as well. The first guest who joins us today is Vaishali Banerjee. She is MD India at Platinum Guild International. Vaishali, hi, thank you so much for joining us. And jewelry mostly has been a very male-dominated sector. I mean, you know, we've been talking about women leaders for a very long time now and celebrating them as well. What is your sense on how the sector has absorbed in women leaders?
Hi, Manisha. Lovely to talk to you. And you're right. You know, today we see a lot more women in the industry in leadership positions or in positions of decision making. And it's really lovely to see that, because when I look back, there were much fewer women who were in positions of decision making or in any kind of leadership role. But it's a very, very encouraging change that I'm seeing. And I'm seeing so many young, vibrant women, in this industry. And it's really required. I think we're headed in the right direction. You know, my journey here has been quite amazing. And you said that, you've seen me. Very interestingly, my leadership team are all women. So it's quite a thing. Of course, we have a large retail team, and it's a gender agnostic. It's based on just performance led. If I look at how it's been here, and as you say that yes, it was male bastion, but what I noticed about the industry right from the start, that people were very open. They were very welcoming. I came from advertising marketing industry into the jewelry industry, which is very, very different kind of an industry for me at that time. But what I found that they were very welcoming, it was very inclusive, the entire atmosphere and the engagements were very collaborative. It was very supportive. Because for PGI, it's always been about building the market in India in partnership with the industry. It's not about doing it on, we are not retailers or manufacturers. So it requires very strong collaboration. And I think this is the partnership that I saw from the day I joined. And since then, I think it's been a very, very enriching engagement with the industry, because I find them very open. We share knowledge, which is great. Listen to each other, because when you're building a new category, you have to listen to each other. And I think the new ideas are benefiting all of us. And today it's a vibrant category. There are, in the past, even inevitably, you'll have misses, you'll have failures. That's part of the game. And I think everybody took it on as learning. And today we look back and see that it is really a very strong, new, incremental business that we have all built together. So it's been a huge amount of learning, extremely rewarding. And I actually enjoy working in this industry. It's unlike anything that I had experienced before, because, this is an industry that values relationships. They believe in the people they associate with. And it's a beautiful product.
Well, we're glad to know that. Let's move on to the platinum as an industry then. And we do understand that we're trading off those 4-month lows that we were trading earlier on. What is it that you've seen in sense of trends, and what's your sense on growth now in 2023 for the metal?
We are seeing quarter-on-quarter growth. So the growth has been steady quarter-on-quarter. So I think while there are ups and downs, one quarter better than the other, both in terms of manufacturing and retail sales, we are seeing steady growth across all the segments. So we are actually very, very positive about this year, and this year we should get an entire full year. And I think this, both in terms of retail sales, manufacturing, whether we look at distribution, all of this, I think, will be seeing definitely strong growth over last year. And then our key partners, in any case, have grown to pre-COVID levels. So I think this is what our expectation is of the market.
All right. Well, I guess the expectations are that the platinum growth in 2023 is expected to grow by 24%. And as you said, we already are at pre-COVID levels in the markets there. How are you looking at, as an association with tie-ups in the Indian markets, what is the marketing strategy going forward to?
I think there is certain things that we have to do more of, because our task is in terms of market development. So in terms of building access, presence, through distribution, that we have to do more of. I think each of the segments have a lot of headroom to grow, both in terms of when you look at the rings segment, which is all your anniversary engagement, commitment rings, there's a lot of headroom to grow. Platinum talks to the young consumer. And within that consumer, we are getting new consumers into the fold, because that's how our demographic is. We have an opportunity for multiple acquisitions. So between the categories. So self-purchase is something that we have launched end of 2020. So it's a very new category for us in platinum in India. So there's a lot of scope to grow self-purchase, both in terms of distribution, in terms of cities, and in terms of demand. Men's is doing extremely well. It is about ensuring that it's a collection, we come out with the right collection to engage with the consumer. Rings, as I say, continue to be the front runner in terms of both category growth as well as distribution growth. So I think it's a combination of marketing is something that we have to do. Branding and marketing is central to the promise of the brands because it's completely branded segments. This is a young consumer. This consumer actually responds very well to marketing. In terms of new channel, e-commerce is a large, is a growth channel for us as well as it is for the industry. So that is another opportunity in terms of channels, additional and incremental channels. But for us, even within the existing channel, reaching more cities and reaching more retail stores is also a potential area of growth.
All right, glad to know that. Thank you so much, Vaishali, as well, for joining us. So all positive numbers is what Vaishali Banerjee giving to us. Supply this year, remember, is only expected to gain up by 3%, but demand a double digit and 20% north on the higher side. So clearly that sector looks very, very positive. Well, that's about platinum, but let's talk about other commodities as well. And the month of March and the current quarter has been quite volatile. Joining us now to talk about all of that is Jonathan Bharat of Probus Securities. Jonathan, hi. Starting with the crude oil prices first, and March seems to be closing in the negative, but what's your outlook going forward?
Manisha, good afternoon. Look, I think it's going to be quite interesting. Obviously, you've got the market trying to decide whether we're going into recession, the market trying to decide whether they've got issues with the banking crisis, issues with interest rates. So there's quite a lot going on. I am quite happy with the fact that it did bounce off an area which we thought was good support. And if it does hold this area, then we could see a rally to the top side. But at the moment, I think the jury's still out to a direction.
So what's your sense on the prices then? I mean, are you looking at much more highs from here? Because I was reading a JPM report suggesting $60 a barrel as well.
Look, I think the fact that we did break through some very critical levels and we had quite a free fall, we all started to think of demand destruction coming back into play. Prices sort of going back through that $65 a barrel. But the fact that we have held it suggests that the market is leaning towards that China. Look, I really get a sense that we've found a new range. I would like it to sort of trade back a little bit higher, but I don't see too much going on in terms of prices to the top side. I actually think that the market will try and work out what's happening with the rest of the globe, and then we'll see China coming into the fray. But remember, we are coming into that period of increased demand from China, as we come into those summer months, and that, I think, as we've found, has seen that support. So I think at the moment, marginally higher, not too much higher than here. Crude loves to trade in a range. I just think we've found a new range.
All right. Another metal that has been not trading in a range, and we saw a breakout coming in, was gold. We've done $2,000 per ounce in the international markets, all-time highs in Australia and in India as well. Where do you see gold prices going?
Look, I generally think we're at that juncture in the market where at $2,000, we've either got to really move on or we'll fail, and this will be a top of some significance. So I think really we've got too many macros to consider. I do like gold to move on through that 2,000. I really want to see it start to move higher than here, get up to that 2020 and stay above those levels. That'll put a whole new spin in terms of a new range, a new higher range for gold. I think also we've got to really be sure about where this banking crisis is actually going, because if we do see people, we do see more concerns, then people will switch to gold as a safe haven. Remember, when we look at gold and we look at the gold silver, I also like silver over gold because gold's had this move, but silver hasn't. It's been a laggard. So I think if I were, I would be hesitant about buying into gold at these levels. But I do think that if you do want to go long the precious metals, then I think silver is the one to look for.
All right. So when you talk about silver, and I've been reading some reports on that as well, with the favorite view coming in that we are headed towards $28, even $30 per ounce on the higher side.
Absolutely. I think when you look at it from these levels, 28 and 30, remember, it wasn't only a couple of years ago, we were trading at US $50 an ounce before it came down. And I think those lows at around that 28 is quite conservative, but it does represent resistance for the market and for silver to actually trade to. But it is a laggard at the moment, so I think we're going to get better value once we in the silver market over the gold market.
Within the industrial metals, then, where do you see support coming in? Because if you are bullish silver, then that means you are, in some sense, some bit bullish on industrial metals as well, especially copper, which we've seen outperform the other metals.
Look, I think I've been focused on copper for quite some time, I think, and now the rest of the market is focused on the fact that we have very, very low inventories. And when you look at the use of copper and the demand, the imports into China all remaining very, very positive. In fact, last month's numbers are up 12%. So I guess the concern is that the whole market is looking at the shortage on copper. That does a little bit of worry me a little bit because I like to be a little bit of lead in some of these moves. But generally, the price action has been quite solid. So I like copper to continue to trade. I mean, there are a lot of targets up around there, around that 12,000 and 13,000 back to those record highs. It's all supportive, but I think the market's starting to become very, very long, and that does worry me. So maybe there's a bit of a clean out before it does start to move up. That'll line up with some sort of recession. But once again, it is China to play there, and China's supporting the market. So let's see what happens. Let's see those demand scenarios. The player's already there to go long copper, and it has been there for a while. I just think the market might get too long, too soon, and we need a little bit of an upset before she does. But longer, out of this next 12 months to 18 months, copper remains a play, so it is a buy on dip.
All right. So buy and dips when it comes to copper as well. So those are buying strategies really coming in for precious metals and copper in the industrial metals. Jonathan, as always, thank you so much for joining us and giving us very clean, clear answers there and buying strategies as well on many of those commodities. With that, it's a wrap on Closing Bell. Thank you so much for watching. Stay tuned.